Why so much interest of late in stablecoins?
We now have mature regulatory frameworks.
These frameworks will help folks come into the space and get comfortable that there will be value there when they put money into stablecoins.
We're seeing firms now looking into developing stablecoin payment rails, leverage stablecoin collateral. It has the potential to completely change that industry. But then on the other hand, we do have some continued uncertainty.
Hello, and welcome to the LathamTECH Podcast, where we survey the latest trends emerging from the world of tech and explore their impacts on your company, both the opportunities and the risks. I'm Zach Fallon, Global Co-Chair of Latham's Digital Assets and Web3 Practice, and joining me today is my fellow Global Co-Chair and partner, Gabe Lakeman. Gabe advises clients on navigating financial regulations and digital assets, payment services, and more. Welcome, Gabe.
Great to be here, Zach.
So, Gabe, what are you seeing with respect to stablecoins? Why the sudden interest? Is it sudden interest, and why so much interest of late in stablecoins?
Yeah, I think it's interesting. We were talking about tokenization before and the interest in that, and seeing how people were looking at this area, 4, 5, 6 years ago, but it's only now it's happening. And the same is definitely true in stablecoins. I mean, again, that was an area where there was a lot of political attention to it a few years back. Governments and sovereigns getting really concerned about control over monetary policy ultimately, and that prompted some of the early crypto regulation, and that I think had a dampening effect on activity for some time. We're now seeing that pass, and we're seeing stablecoins really start to take off again. And in terms of, I think there's a few reasons as to why that is. On the one hand, we now have sort of mature regulatory frameworks in bits of regulation like MiCA and PSD2 for payments, which kind of clearly delineate the regulatory framework for provision of stablecoin services. And then we also have an ecosystem that now has firms with multiple licenses familiar with the technology and able to execute across those different regulatory frameworks. And so we're now in a position where the opportunity is really there, ready to be taken. And we're seeing payments firms now looking into developing stablecoin payment rails. We're seeing crypto native firms looking into how they can accept stablecoins, provide brokerage type services with stablecoins, leverage stablecoin collateral, and design all sorts of different financial instruments and products. So it really does feel like we're at the adoption stage now.
Yeah, and it's interesting, having worked in the space a while, I remember a time when advising companies in the space who are raising capital to build in the digital asset space, blockchain technology, to build dApps, what have you, layer ones, layer twos. And, wasn't that long ago where folks were investing with ETH or Bitcoin as the money, as the currency with which they would make investments in these companies, which, you think of it now, you think of it these days and it seems a bit zany, right? But back then there was no stable coin. And so the emergence of stable coins, the first use case was really for those types of investors to be able to invest in these companies so that they could build these products, because those things didn't exist before. Was that similar in your experience with here in the EU and the UK?
Yeah, absolutely. And also now seeing these kind of regulated global stablecoin issuers. You have multi-issuer structures with sort of liquidity pools across the sort of UK, EU, and US, and so we really do have the kind of mature product there now. But it's also interesting seeing that on the one hand we've got that process happening. On the other hand, there still is increasing kind of uncertainty and some regulatory pushback. So in the EU,
why do you think what is the pushback coming from? Would you say?
I think there's a few things. I think certainly in the EU you're seeing people getting concerned around systematic risk. So you're seeing like Christine Lagarde from the European Central Bank making statements around sort of systematic risk and potential issues with stablecoins in that context, and calling for more legislation in the future. And we're seeing, I guess, similar comments by some of the national competent authorities and national regulators across Europe. I mean, be curious to hear what you're hearing in the US. It does feel like a very different environment over there now.
Yeah, I mean, but now we have the Genius Act, and basically the first US robust framework for stablecoins, and that addresses both federal and state law issues. So I think it's an exciting time in the U.S. certainly to have that first piece of really major crypto legislation passed through Congress in a very bipartisan way. And I think, always some controversy on the fringe, but the idea being that it makes a lot of sense from a U.S. perspective to have U.S. dollar-backed stablecoins and to sort of facilitate that market, facilitate those types of products into the market. And so I think a very exciting time in the U.S. I think it's early days, right? There needs to be regulations need to be adopted. The statute sort of basically contemplates as much, and so there will be some time before those are put in place. But nobody's sitting on their hands. And in fact, I think it was last week or so the agencies in charge put out some draft advanced rulemaking notices that sort of said, "Hey, we're thinking about these issues. We want your feedback." And I think that's a good sign that the U.S. is excited about the space.
Yeah, and I mean, just picking up your point in terms of the kind of US dollar-denominated aspect of stablecoins, I think is really, really fascinating. In that, all the major stablecoins now are US dollar-denominated stablecoins, and I wonder whether that is going to itself cause some tension or some sort of regulated developments as you get increasing adoption.
Right.
Certainly, as you get again people using them without using intermediaries, able to make effectively sort of fiat denominated transfers globally on a peer-to-peer basis.
Right.
And you can see the enormous opportunity in that. Again, looking at like cross-border transfers, if you're doing that with traditional payment rails, you potentially need correspondent banks, multiple payment service providers. You need to interface with some of the kind of global payments infrastructure, which is expensive, takes time to effect transfers. Comparing that with just sort of on-chain peer-to-peer transfer without any intermediary happening sort of near instantaneously, it's completely has the potential to completely change that industry.
Right.
But then on the other hand, if you're a particular jurisdiction, you have your citizens and people in the country now dealing with a US denominated form of currency,
right,
without any intermediaries and outside your control. That again raises political questions. So I think it'd be curious to see whether that's the next wave of regulatory attention on stablecoins.
Very interesting, Gabe. What would you say are the regulatory challenges for stablecoin adoption or implementation of a tailored regime for that in the EU and the UK?
I mean, that is a really interesting question, because on the one hand, we have this regime that's meant to provide certainty in MiCA on crypto asset services, including services relating to stablecoins or e-money tokens. But on the other hand, we do have some continued uncertainty because of the potential overlap between that regime and the existing payment services regime, which has raised questions around whether you need two licenses to provide services relating to stablecoins, and whether you can provide them in the same entity. How do you even go about doing that when you have conflicting regulatory frameworks under the crypto and payments regimes, where it's not practical, or in some cases not even possible, to comply with both sets of requirements in relation to the same transaction. So we've had some progress, but it's still some uncertainty remaining. Again, a scenario we've seen regulators come in, we've seen sort of no action letters from the regulatory authorities, but it's still some kinks to be worked out, I think, over the next sort of 6 to 12 months before we can really get full clarity and full adoption.
Yeah, that makes a lot of sense. And in the U.S. anyway, with the Genius Act, I think some of those concerns around conflicting regulations have been addressed through the preemption that basically the way that the statute was enacted and its provisions, which for all intents and purposes put a federal regulatory premature on the whole space, unless there's a state regulatory agency that sort of adopts rules that are essentially substantially similar to those at the federal level. And so I think that avoids some of the concerns around having the general federalism issues in the U.S. of having a federal regime that may conflict with a state-based regime. And one other really helpful part is they clarified in the act that payment stablecoin would not be considered to be a security or a commodity, and so it would really be carved out in its own special category, which I think is a really interesting approach. It feels like the right approach.
Yeah, I mean, this stuff does feel more assimilatable to payment services or like money transmission in the US rather than brokerage services.
And the truth is, if somebody were to offer something that is not fall within the definition of a payment stablecoin, then then that that kind of dormant question of, is it a security then, or is it a commodity, would kind of crop up and then need to be addressed in the same way.
Yeah.
What would you say the primary concern is for the EU regulators and the UK regulators as it relates to stablecoins?
I think it's that, going back to that question of kind of control over monetary policy,
Yeah.
and then separately the kind of concerns around systematic risk and what happens when a stablecoin becomes much more embedded in the kind of global financial markets infrastructure, and then if you have a run on a stablecoin issuer,
Yeah.
how does that play out, especially when you have issuers with sort of potentially with regulated entities in multiple jurisdictions,
Right, with their own batch of assets in each jurisdiction potentially.
Yeah, and a global pool of stablecoin holders who
Right.
are all looking to run for the door at the same time.
Yep.
So I think that, I mean, that's the concern that the kind of central banks have on it.
I mean, and one thing we've seen for a number of years now in crypto are companies living natively with stablecoins as, the way in which they do business and pay vendors. And you can completely see that happening in this world. And, it's a bit of a canary in the coal mine as it relates to how this could play out in real time with real companies, more traditional companies.
It's fascinating, right? Because you think about that in a cross-border remittance context, right? The initial promise of stablecoins is that you can have much cheaper, faster transfers of funds using the stablecoin infrastructure rather than the old TradFi infrastructure. Effectively, potentially you just need one crypto asset service provider to do the whole set of the transaction, do the kind of onboarding, do the transfer, and potentially do the offboarding. But then the next step is, well, what if the recipient doesn't want to offboard into fiat and just keep the funds in stablecoins,
right,
and then make payments locally in stablecoins? Or what if the sender is in fact receiving, they're paying stablecoins? Then you don't even need the kind of fiat stablecoin off and on ramp, and you're suddenly moving into a world where there are no intermediaries. There's just complete freedom for people to transfer their funds directly.
Yeah, and as I said, that's certainly been the way a lot of companies have operated in the space for a number of years. Working so closely with them, it's a bit, you get a bit myopic on it and think that, well, all companies must operate this way who are crypto companies, but it's not really the case. We need adoption. These frameworks will help folks come into the space and get comfortable with that there will be value there when they put money into stablecoins.
That's absolutely fascinating, and it's just going to be so exciting to see that wave of adoption come outside of the kind of crypto world.
Yeah, completely agree. I think it's a great place for us to conclude our discussion on stablecoins and the issues across the Atlantic. Gabe, thank you for joining me.
Great to be here.
And thank you for tuning into this episode of the LathamTECH Podcast, part 2 of our 2-part series talking about tokenization in the first part and here stablecoins. We hope you will join us next time. Thank you.
You can subscribe and watch or listen to new and archived episodes of Latham's podcasts on lw.com, YouTube, Apple Podcasts, Spotify, or wherever you get your podcasts. If you'd like more information about the topics in this podcast, please email us from the links located in the show description.